Hello, good evening, everybody. Welcome. It is 5:28 p.m. Today's conversation is keys to home ownership. My name is Alfredo, your moderator and one of your presenters this evening. Please be patient with us here. We'll give it a couple more minutes before we get started. I'm going to go ahead and mute myself for the time being and turn off my camera while I get the PowerPoint ready. But we should be starting at about 5:31, 32 at the latest. Thank you so much and welcome again. All righty. Good evening, everybody. Whether you're tuning in live tonight on today is the 19th, and it is currently 5:31. If you're tuning in on a later time, welcome to tonight's conversation, Keys to Homeownership, Empowering Your Path to Buying a Home. I am your host and moderator, Alfredo Martinez, and tonight I have several colleagues that will be joining the call here to help discuss this important information this evening. Um, this evening, we do have our microphones and cameras shut off. However, we are encouraging any conversation and any participation through the chat or the Q&A session here. So please go ahead and use that to the best of your ability as we expect quite a lot of conversations and questions. And let me go ahead and make one of our presenters here available to turn on their mic um, and camera. So, fantastic. I just handled that. So, just some housekeeping items. As I had mentioned, your mics and cameras have been turned off for the time being, and we're going to go ahead and get started into tonight's conversation, which is keys to home ownership and empowering your path to buying a home. And so this is presented by Premier American Credit Union. I am Alfredo Martinez, as I mentioned, the Financial Inclusion and Education Officer here at the Credit Union. I'm a financial counselor. I love speaking on financial empowerment and different financial education topics. Maybe you've attended one of my workshops in the past, but this comes a series of workshops that we're going to continue to do and offering to our members and community at large. I've been in the financial industry and services industry for quite some time. I've held different roles such as retirement counselor, Tyler Banker, Community and Event Special Coordinator. And I feel that it's our duty if we can spread the good word of financial education and help, especially younger consumers, understand these topics, we'll be in a better spot. And so I am one of your co-hosts and panelists this evening. I'd like to welcome and invite Jesse Magana to turn his mic on and give a quick introduction to himself. And Jesse, for the folks here, maybe explain a little bit about your role here at the credit union and why you love doing what you do.
Awesome. Thank you for that, Alfredo. Yes, my name is Jesse Magana. I'm a mortgage loan officer here at Premier American Credit Union. I've been with the credit union here for about 8 years now, but I have over 25 years of experience in real estate in general. Started as a real estate agent for the first half of my career, and been on the mortgage side now for the last 15 years, almost 15 years or so. Uh, I love this business. I love the process. I like to help consumers and help our members, especially through the process of buying a home. I think it's like they say, America's dream, and it's something that I take a lot of pride in participating in helping people achieve that dream. Um, my my experience, like I said, is both in sales and in originating. I have a pretty good idea of, or a good, well-rounded, I should say, um, you know, as far as experience is concerned. And I'm here to help. That's my goal is to help as many people as I can while I'm here, and I'm able to do it.
Thank you so much, Jesse. We'll definitely be counting on your experience and expertise throughout the conversation tonight. And so thank you for being here. I do have one other person on the call that will be co-presenting, co-hosting, and adding some valuable insight. I think we got past our technical issues. Lisa Bailey, are you on the call? And if you are, can you briefly introduce yourself? Tell us a little bit more about who you are and why you love doing what you do.
Yes, can you hear me?
Yes, thank you. Yes, I can hear you.
Thank you so much. So, thank you for having me. So, I have been in the business for over, I think we're coming up on 22 years now. And my passion is just helping people try to navigate home buying and home selling. And I really try to pride myself on trying to find the right fit for everyone out there with a no pressure approach. And I really listen and dive into what our clients are looking for and try to hold their hand through the entire process. And so just to turn a stressful situation into a positive one by the end of the day when we're done with our journey of home buying.
Thank you so much, Lisa. I will definitely be counting on you as well to share your insights, and where you think this could be some good opportunity to help our members in our community understand this and this process of home buying. It's quite a beast. So on the call, we have over 50 years of experience in different doing a little bit different things, but we're all convening today to talk a little bit about how we can dream it, own it, and home buying 101. I will kick us off with some financial education, some general knowledge about the home buying process. But Jesse and Lisa, I may ask you throughout the presentation to provide your own insights, your own experiences. But I also invite you to nudge me and say, "Hey, Alfredo, I have some questions, or I have something that I want to add." Tonight's conversation, while the subject may be kind of heavy, we're going to keep it kind of light, and so all the folks that are listening in can engage in the material, use that Q&A function, use the chat to share your thoughts and process. So again, thank you, Lisa and Jesse, for being here this evening. So what we do have is a little agenda for you this evening. Well, we just did our welcome and introductions. I'm going to talk a little bit more about understanding homeownership and the different aspects to that. If you see me looking to my left, it's because I have a dual monitor, so please bear with me there. And we're going to talk a little bit more about the home buying process. We're going to talk about some mortgage options and definitely lean into the expertise of Jesse and Lisa throughout the conversation tonight, and talk about some resources and maybe answering some frequent questions. So let's just go ahead and get started here. And I just really quickly want to acknowledge that we have a lot of folks on the call this evening. We have 102 folks, which we love to see, tells me that this conversation is very much needed in our community. So one of the first questions I often get, and I like to talk about when it comes to just the education and the knowledge of surrounding affordable or home ownership and housing, is renting versus buying. The age-old question, should I rent or should I buy home? So I just have some information here that I'd like to share. It says 1 in 9 Americans move every year, whether to rent or buy depends on your preferences and what you can afford. In the short run, renting is usually less expensive than buying. In the long run, the opposite is usually true. And so maybe that fits with the advice or knowledge that you have, or maybe it challenges a little bit differently. We're going to explore that a little bit more here in a second. So let's go ahead and go on to understanding homeownership. So let's talk a little bit more about that, right? The benefits of owning versus renting. So I put this slide together because I really quickly wanted to talk about some of the equity, and I have an example a little bit later down the presentation that I'd love to share with you. Is taking advantage of that price appreciation over time. So I have a graph here in a moment that I'll share with you, but the idea is this, is that over a period of time, your price appreciates, I mean, your home appreciates in price, thus creating equity, which allows you to do different types of financial activities. So that's definitely a plus and a benefit of owning a home. Um, the question here is about stability or flexibility. I have seen that maybe folks in their later part of their lives maybe don't want the upkeep of a home and all the challenges that it does, that it makes much be easier to rent. I have certainly seen that in different and with different types of members and different folks in the community where they sometimes opt in to rent after a long period of home ownership just because the flexibility of having a lease and a lease contract versus a mortgage, especially for maybe a widow per se. I have definitely seen that. There are some important tax considerations when it comes between owning and renting. The mortgage interest and real estate and property tax qualify for income tax deductions. So this is just another call out. If this is not part of your conversation, if you are a homeowner, definitely talk to your tax preparer and making sure you're taking advantage of that. But there are some different types of tax implications, reducing your tax liability from a home ownership. And just some common misconceptions here. You need 20% down. That's although it's not general, it's not a misconception per se, but it is something good to have if you do have that high down payment. But home buying, and another misconception here is home buying is only for high income earners. Tonight, we're going to go ahead and talk a little bit more about that and talk about different types of programs that allow you to build towards home ownership. But at this point, leaving the floor open to my co-presenters, Jesse, Lisa, anything that you'd like to add or share regarding maybe the benefits of owning or renting in your perspective. If not, no worries.
I am going to chime in a little bit here. Um, Along with the equity and the stability of owning a home comes the pride of ownership. Um, as you start a family, you get married, you start a family, you start planning roots, and that gives you a sense of pride, something you can pass down to your kids. So that's another positive on the home ownership part. And another thing also on the misconception side, the 20% down. Right now, 20% is the sort of the uh, not the ideal down payment. I don't want to say that, but it is a breakaway point where most financial institutions, anytime you apply for a mortgage with less than 20% down, they will require mortgage insurance. So that's where that misconception is that people say you need 20% down or more only to avoid the mortgage insurance that comes with the lower down payment. But it doesn't mean that you need the 20%. I mean, we have 3% down programs, we have 5% down programs that we'll get into a little later. But there's even programs and grants from the county and city that a first time buyer can take advantage of. Just keep that in mind.
Thank you, Jesse. Wonderful insights there. Absolutely. We're going to talk a little bit more about what you just shared in the presentation. So keep that engagement coming. So here is the example that I wanted to share with you really quickly. So what we have here on the screen now is the net worth life cycle, the U.S. Census Bureau. So to Jesse's point, a part of having the pride of home ownership and be able to raise a family and and do those types of things. We talked quickly about the equity. And another aspect to what Jesse was alluding to is creating generational wealth. So what you see here is a bar graph of a 2020 census, where we looked at the the median net worth of Americans across the United States. And I like this slide because I think it shows us a few things. One of the real things that it shows me really quickly is if you see in the blue bar, you see the net worth, and then in the red bar, it's the net worth excluding equity, and it's net worth excluding home equity. So essentially, the red bar is represented for folks who do not become homeowners. And so what you see is actually the difference in equity that is developed and that net worth, and that difference is quite stark. We see the peak at 65 to 69 years old at 194,000. In that same age frame, with excluding the equity in their home, it's 43,921. So roughly 150 $1,000 difference in equity developed there. And so a part of having the pride of being a homeowner and having to uh, raise a family, you develop that generational wealth, who gives you access to different types of activities, things like a home equity line of credit, which you can then do to invest and do other activities with, things that you can use to help build a financial foundation for your family. The second thing that it also shares is that this is not in the long run, what we see is that the average American doesn't reach their peak net worth until the later parts of their life. And so home ownership, especially in Southern California, or if you're tuning in from another area, as we all know, it's increasingly difficult to achieve. We have construction costs rising. We have different types of cost of just the housing in itself rising. And so we'll talk a little bit more about those programs. But I share this because one, don't fret, there's time. Most people don't achieve that to the later part of their lives, but it is also a call to action. Is if you're thinking about buying a home, maybe talking to Jesse and getting and having this conversation with all of us together, including Lisa, figuring out how we can best do that. Alrighty, so let's continue on. What we have here is now that for the home buying prices, to buy a home, you need to be financially ready. To finance a home, you need to have sufficient and steady earnings history. So now we're going to get into the meat of the conversation, the nuts and bolts of the home buying process. So let's go through this step by step. So the first step is getting your finances ready. Keep in mind that this process, which I think I share at the end of the steps, is anywhere from 6 to 9 months is typically the average time for a home buying process. There are outliers and it does vary, but the first part is getting our money in order and getting our finances together. So does your FICO score need attention? That FICO score will dictate a lot of things like terms, payment, things of that nature, which can ultimately result in thousands of dollars potentially saved or having to pay because of your score. So if you haven't, you should, because poor credit history could cost you a higher interest rate. We'll talk about some resources at the end of the presentation that you can use today and start working towards this if this is part of your plan. Another good thing to do is to estimate your total monthly cost. This is important for determining home affordability. The rule of thumb is to keep your housing costs to 30% of your income while aiming for 25. Well, that's ideal. We know that in today's market, that's not always the case. We have folks paying a lot more, closer to 40 to 50% on housing alone. But this doesn't mean that this can't give us a frame of reference and help us better understand affordability so we can navigate this conversation when we do speak to a Jesse or to a Lisa or getting these things together. Another thing is to identify down payment or down payment assistance. Government assistance is available for qualified first-time home buyers, which we'll be talking here in a moment. So just don't fret. Know that not having all the money up front, there are solutions. There are, as Jesse had mentioned, government programs, local government programs that want to put the residents into homes. They see the value of that and investing in their community in that way. All right. So that's step number one. We'll move on to step number two, which is pre-qualify for a home loan, which is another very important step. So here the general recommendation is to make a list of 2 or 3 lenders and include your credit union. One neat thing here, and Jesse, and maybe you can speak to this a little bit more, is how the credit union works with its members when it comes to these types of services and products, and how we kind of work through that process with them. You can hire a licensed realtor if you do need help. The state licenses them to provide advice and assistance, which is something I'm sure Lisa can speak to. And know that lenders use rules for home loans. So to estimate the maximum affordability of housing expenses for a home loan applicant, lenders carefully apply 2 rules: of front end and back end ratio, which I'll talk here more in a second. But any thoughts from our co-panelists or presenters on the matter? Hearing none, I'll go ahead and move forward and talk a little bit more about some of uh, these next steps here. So in step three, we have here for a home, the home buying process. Step number three, searching for a home online or in person. We do have online resources, including here at the credit union. The PremierAmerica.ViewHouse now gives you an idea of what's available in your community and what's available from prices, floor plans, and etc. And anything, it's all interconnected with the credit union. So feel free to leverage that. We'll talk a little bit more specifically about that site, and we have some visuals for you as well. The next thing here, it says make a list of must-have items you're looking for in your home. So bring a notepad, a tape measure with you, make sketches of floor plans, and measure for yourself. So there's some serious thought that needs to go into this, future planning. Things that the folks here at the credit union can help you with. How many rooms are you looking for? Do you anticipate your family to grow? Is this more of a starter house to get you going? What are the must-haves for you and your family? This could be non-negotiables like a backyard with a certain amount of square footage, different types of amenities in the neighborhood or what's nearby. This can help you find and locate areas that are not only more affordable, but also meet those must-haves that you think that you need or you feel. Lastly, here it says look at only 2 or 3 properties in one day at most. Looking at too many homes in one time can be confusing and exhausting. So keep in mind that this is quite a long process. Again, as I mentioned earlier, the average home buying experience takes anywhere from 6 to 9 months. Of course, there's different circumstances that may be sooner or later, but know that that's the average, and these are the general kind of steps that one takes to move forward. All right. So we did talk about some of these programs, right, from down payment assistance. We're really quickly going to talk about one before moving on called the WISH program. So the WISH program connects essentially first-time home buyers to low and moderate income with a federal home loan. The FHA loan bank programs offer these types of buyers a matching grant up to $29,000, 172. So $4 for every $1 the home buyer puts in toward the purchase of a home, which is a great way, a great motivator to help individuals, especially in that situation for first-time home buyers, to be able to buy a home. So this is somebody who have not owned a home for the previous 3 years. Applicants must meet income eligibility guidelines. Financial assistance that I mentioned for up to $4 for every $1 that the home buyer contributes. And so this could be that $30,000, and if you were to raise a nominal amount, could put you well over that 20, could put you closer to that 20% down payment, and help you with this type of assistance, right? Of course, the Premier America lender is here to help you and guide you through the application process. So this is one of the things that we list on our website. So again, premieramerica.com. If you wanted to check out the different types of programs, a little bit more information, you can learn more. But of course, we also have the folks on the call this morning or this evening to be able to help us understand some of these things. And so I do see a question that just popped in. Thank you so much. In the WISH program, what does the financial assistance cover? Is it for the down payment? To my understanding, yes, it is for the down payment assistance, essentially the purchase of a home meeting the eligibility criteria that you see here on the screen. But if you want to learn more, Premier America .com will take you more and a little bit more in depth. And of course, if you want us to expand on that, please continue to throw in your questions. We can definitely go a little bit deeper into that at the end of the conversation here. Thank you so much. So I did mention and I did call out the front end and back end ratio, and I do apologize for the heavy text here, but I think this is such an important concept to understand and know because lenders use this to help them determine affordability and whether a loan application can get denied or not. So on the consumer end, for you, this is helpful because it helps you better understand if I can afford my house and whatnot. So really quick to qualify for a home loan here, the front end ratio compares the totally annual PITI, the principal, interest, taxes, and insurance expenditures for housing with the loan applicant's gross annual income to assess the borrower's ability to repay the mortgage. So the example here on the front end is if we apply a 28% front end ratio, it looks like this. A young couple with a combined annual gross income of $100,000 could qualify for a mortgage requiring total annual expenditures of less of $28,000 or $2,333 per month. And so this gives you a rough idea of where I need to be in order for affordability. So again, I believe this comes from actually a law that had passed after the 2008 crisis, the Dodd-Frank law, that required lenders to only be able to give certain applicants or approve certain applicants based on these front end and back end ratios to help them better understand, can the consumer, can the homeowner afford this and not be overburdened by being more than a certain percentage of their income. So that's a little bit of the history behind it. But the back end ratio compares all of the monthly PITI expenditures. So essentially the front end ratio, but it also adds your debts that you have. So this is why it's usually generally good advice to take care of your finances up front. So if you do have credit card debt, personal loan debt, even auto loan debt, it's always a better idea to take care of that upfront as best as you can to prepare yourself for the best ratio that you can get. It generally improves your credit score. I did see a question come in the chat about how do I clean up my credit, which we would be happy to talk about here a little bit more at the towards the end. A lot of information to unpack there. But one way, based on what I'm speaking on right now, is a good way to clean up your credit is to reduce your credit lines. So the general rule of thumb for credit lines, for example, let's say you have $1,000 credit card. And if you have a balance of over $300, which is 30%, it actually starts affecting your credit negatively. So the idea is to minimize your credit utilization of all your trade lines. I say trade lines, but that really just means credit card debt, any type of personal loan debt. The idea is to reduce that utilization to help increase your credit and clean up your credit. And so the back end ratio, going back to it, as I had mentioned, it's all the PD, the principal, interest, and taxes, but also that debt that one has. So a ratio of 30%, 36% or less is desirable according to home lenders. The home loan seekers may not exceed 43% to obtain a qualified mortgage under the Dodd-Frank Act. So the same example of $100,000 annual gross income or 8,333 monthly gross income with a back end ratio of 38% could qualify the young couple for any loan that does not result in the total monthly payments exceeding 3,166 and 67 cents per month. So the idea is that after with your mortgage plus your debt, it should not your monthly payment should not exceed 3,166 and 67 months. So that's when we look at what type of salary what we have, and we can combine that if we're doing this by ourselves or with a spouse. Um, and we can apply these front end ratios and back end ratios to give us a better idea of what ballpark are we looking at. Keep in mind, we're not there's a lot of other factors that can go into determining eligibility and approval, but we want to be able to at least get a pretty good idea of where we are today, so that can kind of help us become a little bit more better prepared financially. So I know I didn't go full into depth about the question of how do I clean up my credit, but we'll go ahead and go a little bit deeper into that as we continue the conversation, and specifically towards the end of the presentation. Thank you again for that engagement. Okie dokie. And so I think the slides got a little bit mixed up here, so I do apologize. But moving on to step 4, agreeing to the terms of the seller, which is the next step in the process, is to use online resources found on our website to see options, prices, and floor plans. I think I went back on this. Apologies on this. So agreeing to the terms of the seller, making sure that you have those contingencies locked in, things that I can't speak too much of just based on my knowledge, but the areas of the areas where you essentially have to come to terms with the seller and saying that we agree with certain things. If we don't, we have to kind of figure that out. And this is part where the realtor and the mortgage loan and the entire home buying process can help you navigate as well. And so as we continue through those, we can now once we have the agreement set forth by yourself and the seller, now we can formally apply for a mortgage loan. And so I'll actually defer to Jesse here if you want to add and talk a little bit more about this process with the folks on the call this evening.
Sure, definitely. So when it comes to and we're at this a stage here where you've already prepared, you are in the market to buy a home. You possibly went and saw a few homes, and you're getting excited. You possibly talked to some friends and family about their situations and things like that. So uh, to make things really simple, financing is probably, I'm going to say, is the most important part of the home ownership process, because the loan or the financing for the home is what's going to determine, you know, the price, the loan amount. Once we, the loan officer, the company, we check your credit, we determine, what programs are available based on your credit and your income, and like we spoke a little bit earlier about the debt ratios. But when it comes to mortgages, there's different kinds of mortgages. There's fixed rate mortgages where the interest rate that you get on your loan does not change. It'll be fixed for 30 years. So it's a good way of keep a stability in your monthly expenses. But along with that, we also offer or there's available adjustable rate mortgages, and adjustable rate mortgages are it's a way to also get into a home with usually slightly lower rate. Sometimes if you get into a home now, and if interest rates come down in the future, you can always refinance to a fixed, and that's what a lot of people use that they leverage that to actually get into a home now, and then with an adjustable rate mortgage, a little slightly lower, and then later on refinance the mortgage to a fixed rate. The home ready mortgage it's a program where um, we call it for lower or modest income buyers that usually or that weren't able to qualify for a conventional mortgage. This allows them to get into a mortgage because the guidelines that I use for this program are a little more flexible, and it gives a first time buyer that opportunity to get into a home when, you know, with a regular mortgage they wouldn't be able to do so.
Thank
Alfredo,
you for
back
that,
to you.
Jet. Yeah, no, I appreciate that. And Jesse, is it fair to say that anybody, because I think one of the questions, especially when I see this and first time seeing it, like, how do I know what I need? I think it'd be safe to say that one of the best ways to do this is to have a conversation with you, right? Or to have a conversation with the credit union to help us determine what's the best path forward. Is that right?
Yeah, that would be the first step. That would be my recommendation. You don't want to go out and look for a home, get all excited, and then find out that you can't qualify for it. So the first step would be to sit down with a mortgage loan officer, preferably here with us at Premier America Credit Union. We can look at your situation as a whole and determine what options you have and what's best for you, and then you can make the decision, or the buyer can make the decision.
And just because we're on topic, I did have a question come up. Um, and for either if Lisa or Jesse knows, what FICO score does a home buyer need for our purchase programs? Do we have an answer to that?
Yes. So most financial institutions use the same guidelines. There is a little flexibility depending on what bank you're working with, but just generally as a rule of thumb, um, for conventional loans, you can get a mortgage with a credit score of 630 or better, and
Mm.
with government insured programs like FHA or HUD or VA, they allow a lower credit score down to as low as 580 in certain situations.
Wow, that's flexibility that gives the consumer a little bit more options. So to the question about the FICO score, it varies, and it sounds like one of the good steps is to have a conversation with Jesse and his team to figure out based on your specific profile what the next best step would be. Fantastic. And let's see here. There was another question that came up. I'll go ahead and say that towards the end, but thank you for sending that, just so we can have a more robust conversation towards the end of the presentation here. Okay. So moving on to after step number 5, after our mortgage options and formally applying, assuming that all went well, we got to prepare for step number 6, which is preparing for closing. So this is where we do the change of address notification, the hiring of a moving company, turning on and off utilities at both properties, as an example, which we hope we want to see everybody do at least one time, right? Dream it, own it. That is home buying 101, is getting to that place of preparing for closing and eventually closing day, which is we've seen several members do that already and seeing if we can maybe help some more folks accomplish this dream. And so for recap, for the home buying process, we're going to go ahead and we talked about getting your finances ready, which includes, getting that credit score where we need to. Jesse did talk a little bit more about that FICO score and where the ranges can be. Government-backed programs, 580 potentially. Conventional, we're looking at the 630 range and above. So depending on that, there are options. I do see the questions coming in through the chat. We'll go ahead and answer those here in a second. Moving on to the recap here, we pre-qualify for a home. So we have that conversation. We see, as Jesse called out, we don't want to be out searching and feel get emotionally attached to something. Let's talk about affordability. Let's talk about doing things the right way so we feel confident in our searches. And then we search online or in person for what we're looking for. We agree to the terms of the seller. We have another conversation with the credit union to formally apply. And then upon that approval process, we prefer closing, and then closing day, which is the day that we all want to arrive to in the home buying process. And our journey to home ownership is now at a new chapter and kind of developing that generational wealth, raising that family, doing all the neat things that homeowners get to do. So that was my portion here of the home buying process, a general education. Now we're going to go ahead and continue the conversation with more of the expertise of our experts here on the call. And so let's jump into the home rewards program and benefits. And so if I'm not mistaken, Lisa, is this where you jump in and talk to us a little bit more about the home rewards program, or is this you, Jesse?
Yes, I can talk to the Home Rewards
Fantastic.
program. Yeah. So what the Home Rewards program is what we want to do is we want to guide our home buyers through the process. So once you meet with the lender and you get an approval letter, and then you decide on what price range you want to be in and what areas you want to be in, then that is kind of when the real estate agent gets involved in the transaction. And what we do is we pair our home buyers with a local expert in the area. And the reason we do that is if someone comes to me and says, hey, I want to see a home in Inland Empire, I'm not familiar with the Inland Empire. So I'm really not going to be as service as someone that is familiar with that area. So we always do our best to guide our buyers with an agent that is familiar with the area. So we do pair you with a trusted agent that has been in the business for years, and we make sure that we vet all of our agents, that way service and accountability are on the forefront of what we're looking to do, so that way we can guide you through the process. With that, and then the partnership that we have with the credit union is, in the event that the seller is agreeing to pay for the commission, the buyer will earn a 20% rebate from the real estate agent's commission, and that will go directly towards your closing cost. And that happens all within escrow. So there's no need, no one's, you don't have to worry about, oh, are they going to give me a check at the close? Everything happens in the escrow process, and escrow will go ahead and apply the credit towards your closing cost. And that is a really good benefit to have, because everyone's going to have closing costs. And if you can get a little bit of help from the real estate agent, then that just makes a little bit less money that you have to bring to the table. And then with escrow, if you sometimes as a buyer, we are able to ask for particular escrow companies during the transaction. And if we are able to do that, then the escrow company that we work with gives a 20% discount on the escrow fee. And that just really depends on what type of market it is that we're in. Normally the seller would be picking the escrow, but there's oftentimes, if you're the only offer that's in, then as a buyer, we can go ahead and ask for the escrow company and see what they say. And then once you do enroll in this whole process, we give you access to the MLS. And with the MLS is the multiple listing service, and that is the search feature. And so any home that you're looking for that is currently on the market, you are able to search that home through our search feature. And we try to help you set up that search, because what we're looking to do is we don't want to narrow it down so much that a perfect listing would fall through the cracks. We want to try to make it a little bit more broad, so that way we're looking at price, location, beds, and bath. And then that way the realtor and the buyer can filter through and see which homes are meeting their best interest. And let's say you're absolutely like, I don't want a pool. Well, then we can go ahead and exclude that. But I try not to squeeze it down too much, because sometimes when we do that, we miss the perfect home if it's labeled incorrectly. So that's a little bit of the Home Rewards program, the benefits. But ideally the benefit is you're working with a trusted agent who's been in the business and has your interest at heart, and then that rebate that's going to come towards your closing cost. And so once you're enrolled in that website, you're able to just go on and search for any home that's on the market. If it's on the MLS and it's currently active, it will definitely be popping up on your search feature. And we always help you navigate that as well. So we help you try to set up those searches the best that we can.
And Lisa, I believe I have the slide here. This is the MLS that you're referring to here.
Yes, so this is what their main page, their homepage will look like once they're enrolled in the program. And then they would just sign in, and then that would bring them to like their search portal. So that way they can find any home they're looking for that's listed on the multiple listing service. And then it will look something like this. So this will pop up, and this just gives you a good example of the rebate. So that way you can actually see what that gets you. So for this home in particular, it's priced at $500,000. And so if you buy the home for $500,000, if the seller pays an agent fee of 3%, that's going to come out to $15,000. And then as a buyer, you would get 20% of that. So 3,000 of that from the agent's commission is going to go towards the buyer's closing costs. So they're really earning 3,000 for just using an agent that's part of the program. And obviously the higher price is the higher rebate. But for this example, the 500,000, if they're paying a 3%, you could earn up to $3,000, and that goes directly towards your closing costs.
Wow. So on top of different types of down payment assistance programs, there's home reward rebates that can help reduce the cost and making it even more affordable to help us. And so I hope everybody's tuning in. I'm seeing a lot of comments, a lot of questions come into the chat, which we'd be happy to get into. Um, Lisa, I guess I'll just throw a question at you right now, if you don't
Yeah.
mind, that came here in the chat. One of the questions here is, I guess we'll tackle this one. So, how long in days or weeks does this whole step take roughly? So, in your experience, what have you seen? And if you can speak to that, that'd be great.
Yeah, so great question. That's really hard to answer, because I've had it to where I've shown a client maybe 4 homes and they've walked in and said, this is the one. I've also worked with buyers for a year and they just can't find that perfect home. So it really just depends on, I would say there's not an exact formula. It just depends on the buyer. Right. And the beauty is that we don't push the buyer into making a decision. So if it takes a year to find a home, it takes a year to find a home. If they're able to find something in a week, great. But we don't apply pressure. We don't, make anybody uncomfortable, because we understand that it is the biggest purchase of your life, and we want to make sure that you go into this with no regrets and find the home that makes it worth taking the step away from renting into home ownership. So we really want to make sure that we are able to connect those dots and make sure that when we close on escrow, that this is exactly what you had in mind.
Thank you so much, Lisa, for that. I will add for context, I think it also comes back to how prepared you are and financially prepared. And maybe Lisa, you would agree to
Right.
this, is if we have a good idea of, where if our FICO needs to be where it needs to be, if our debt to income ratio needs to be where it needs to be, we're a little bit more prepared and we're a little bit more nimble to make decisions. Would you agree with that?
Absolutely. Absolutely. I like to tell people, let's hit the ground running. So let's make sure that when we get out there and start looking at homes, you have your pre-approval letter ready, you're comfortable in the price range that you're in, you're comfortable with that, what that means is going to be a monthly payment. And that way, if we're out there searching and you find the perfect home, you're ready to go. You already know
Hmm.
that, yes, the home at this price, I'm good with it. As long as I could get it, this would be something I'm interested in. So as long as all of our ducks are in a row, then once you come out starting to look, that potentially it could be, we could close escrow in, our escrow period's 30 days. Sometimes we look for a week and then you find the home, we make an offer and we're in escrow. And we close within 45 days if you start looking. So the timeline depends on how fast you're able to find something that you like.
Thank you, Lisa. There are a lot of questions which I'll come back to here in a second. So for the folks that are tuning in and throwing your questions in, thank you so much. I do see them. I'm not ignoring them. We're going to wait to get to these so we can have a more robust conversation at the end. And we're almost near to the end, so we'll go ahead and continue the conversation. I really excuse me. I really quickly want to call out a free resources. So there was a question earlier about how do I clean up my credit? I could talk to you for about an hour on how to do that. Um, but we do have a free resources that you can call on your own time, as an example here on this call. So we partner with GreenPath Financial Wellness. They're not for profit. They've been in business for over 60 years, and they offer free credit report reviews, budget counseling, and coaching. And specific to this topic of today of Dream It, Own It, Home Buy 101, they have HUD certified counselors, the housing and urban development financial counselors that can help you with your home buying process. Why is this important? Well, for a lot of the government programs that have down payment assistance for first-time home buyers, the government actually requires you to go through one of these courses. If you go with any other organization out there offering this first-time home buyer HUD certified counseling, they often comes with a price tag. It's usually anywhere from $100 to $200. Know that because you're a Premier America Credit Union member, these services are already paid for in advance through your credit union membership. So when you give them a call, the phone number's on here, or you can go to greenpath.com/Premier America. If you give them a call, it's all over the phone, completely confidential, English and Spanish. And if you speak a language outside of that, it's available up to 300 different languages via a teller interpreter. And so the idea here is that you'll get this assistance and any help that you need and any guidance at no cost to you. So this is a free resource. I definitely recommend that you take advantage of it if you need it. Today's conversation is about home ownership, but if there's a different type of need, financial need, with a different type of idea that you have, whether it's credit report reviews, budgeting, student loan counseling, debt management plans, they're here to help. So please take down this note. This is also available on our website under our Financial Wellness Center. So just know that it is available, and this recording will be, this presentation is being recorded and will be sent in a follow-up email to you all so you can come back to these resources. So again, I definitely see the questions coming up. Thank you so much. We're getting to the near end of this conversation. So I also wanted to really quickly throw Jesse contact information out here. So please take note of that. You can even give him a call, give him an email. He is in Los Angeles for Ventura County. I know there was a Texas program, Texas question in the chat, which we'll talk a bit more about the resources. We do have folks to assist in Texas as well. I don't have their information on the slide here, but it is available on our website. And so please use that, and I'll see if I can dig up a little bit more while we answer some of these questions and get into it. So to this point, we're going to go ahead and answer your questions. I'm going to go ahead and stop sharing my screen here. So we're all here. and we can kind of get into these questions. So, the format for these questions, I invite both Jesse and Lisa to tackle these questions either together. If there's something that you feel you want to add, by all means, definitely open forum. Okay, so we answered about the WISH program, which financial assistance it covers. Is it for down payment? Yes. We talked about the cleaning up credit score. We talked about the FICO score. Um, so maybe this question, Lisa or Jesse, but it may be more in Jesse's lane. Is there a fee to refinancing an adjustable rate mortgage? Any thoughts there, Jesse?
Yeah, I'll chime in here. So, refinancing a mortgage is a simple process. We would like do is similar as the purchase process. Would check the credit and go through the debt ratio guidelines and things like that. As far as fees, just your basic normal customary fees. There's title fees, there's escrow fees. There's because you're getting a whole new loan. You're getting a new loan to pay off the old loan with new terms, better terms, lower rates, lower interest rate. So the process is similar. The fees are slightly lower. Um, um, they're not as they are when you purchase, but um, there is a fee. Yeah, I guess that answered the question, but not they're not as high as a purchase loan fee would be.
And is it safe to say, Jesse, if somebody was interested in refinancing their home and maybe there's a fee schedule that they can talk to you a little bit more in depth with and kind of get some
Yeah,
estimates and things of that nature?
definitely. The fees are based on the loan amount. So, depending on the loan amount, we can definitely go over that. We can provide estimates. I can email, we meet over the phone or even in person if you guys are local. We can set up an appointment and meet at our corporate office here in Chatsworth. Um, but yes, we can definitely provide those estimates. Anybody interested?
And so there was a follow-up, a question by the same person, and I think I know the answer, but I'll check with you. So the follow-up question is if FICO scores are low, would the monthly payments stay low also? So if I understand that right, we're saying we have a low FICO score, which would actually increase our monthly payment, right?
Yeah, the lower the FICO score, the it could affect the interest rate. So the higher the interest rate, the higher the payment would be. So yeah, the lower the credit score would, in essence, affect their monthly mortgage payment.
Awesome. So it seems to me that the best step here for the person asking these questions is to dive in a little bit deeper into their own personal finances, have a conversation, and see if it makes sense or what options are available to you based on the questions that were asked.
Yes, definitely.
Fantastic. So let's see, moving on. All right, I'll throw this both at Lisa and Jesse. Feel free to chime in. What is the difference between pre-qualifying and formally applying for a loan? What changes?
I can tackle this one. So applying. Okay, for a pre-qualification, basically that means that you went and you sat with somebody, or you even spoke with somebody over the phone. They might have given you some estimates, ran your credit, and based on the credit and the information that you provided, they can say, okay, we can pre-qualify you for this type of mortgage. A pre-approval means that the lender went a step further, and verified the income, verified assets. An underwriter has reviewed your loan, and the approval is more of a commitment to lend versus a pre-qualification. Many people go out and um, start looking for homes, and uh, wherever they go, they provide their credit, information, and they get pre-qualifications that way. One, it affects your credit every time, your credit score every time somebody runs your credit. So you don't want to do that. You don't want to go and have 6, 7 different lenders check your credit and provide pre-qualifications. It's better to commit to one, sit down, get the pre-approval, have them go through that process, because when you find a home, um, most likely here in California, you're going to run into multiple offers, and the offer that's most qualified, that has the pre-approval, has a better chance at getting the offer accepted versus one that comes in with just a pre-qualification. So I hope that answers the question.
It did, Jesse, and I think you spoke. There's a lot of little nuggets in what you said. I just want to call out two. One, if you're pre-qualified, you're more favorable, or you look more appealing or safer to the seller, which is a good thing. The second thing that you mentioned that definitely I always say myself is that your credit score, you shouldn't run it with every lender. I say treat your credit score like your social security number, where you don't hand it out as freely. When you know you're ready to apply, apply because to the question earlier about the credit score or the credit, if you run your credit score, it will decrease your credit score, impacting your approval odds, terms, and again, costing you dollars potentially. All right. Okay. So there was a question about the how long. We answered that. So it looks like we have a young person here. It says, I'm 18 and this is my first time involved in anything home buying related. Is there any age restrictions? What do we think, team? I think I know the answer, but I'll let the team here answer.
Well, I could say 18 is the um, customary minimum age, um, but but there's other factors that come into play. You know, qualifying for the payment, your credit score. I mean, at 18, you most likely won't have a credit score unless you started at 16 or something like that, where you already established some credit where you can get a credit score. So yes, you can buy a home at 18, but there's other factors, like I said, that come into play to actually get approved for the loan.
Awesome, awesome. And I think, Lisa, this comes to you. Is the Home Rewards program only available in California? Is it also offered in Texas?
I believe we do have agents that are part of the Home Rewards program in Texas as well.
Awesome. So accessible both here in California and Texas. Oh, this one's an interesting question. What is better value, condo or townhome in Los Angeles or Ventura County? I will do my best to tackle that, but please jump in here, team. I think value, I mean, there's the financial value, but other values can be subjective. Things like that. It's kind of tough to answer. What do you think, Jesse?
I agree with you. It's a tough question because if we're talking in price or value of a home, um, I believe that you could probably get a better deal in the Ventura County area than LA County because of where the prices are right now. But again, it's subjective. It depends. Um, there's certain areas that are a little more affordable than others, and there's factors that come into play there. So it really just depends on where you live and um, what your likes are. Because things LA County is a little bit more congested, there's more people. Usually you deal with more traffic issues and things like that. Where Ventura County gives you a little bit more freedom when it comes to that. Um, but it also has its areas that are priced high, and so it really just depends.
Thank you, Jesse. Lisa, do you have anything you want to add?
I always think that if you're looking at a condo or a townhome, my suggestion is if you're able to afford a townhome, and in my mind, what a townhome is like is where no one is above or below you. You're almost like an attached single family. Those tend to hold their value a little bit better because normally you have a garage that's attached to it, and the garage seems to be the hot ticket. So if you're able to pull off a townhouse, I feel that that holds its value a little bit better, and that gives you a little bit more room for longevity than if it's just a condo. You have somebody above or below you, and that could also affect value depending on um, neighbors, if people are noisy up and down type thing. So anytime if you can get into a townhouse first, I feel like that would appreciate a little bit better than a condo will. But with that being said, location, right? Location is what's going to determine where value goes and if value goes up or down. So if you're able to do a townhouse in a good location, that's going to be better than a townhouse in maybe not as desirable location.
Wow, sage advice. Thank you so much, Lisa. For those who live in Southern California specifically, parking, parking, right? So I definitely resonate with the having the garage and whatnot. So thank you for that. All right. Um, Here's another question. Opening it to you both. How much is needed in the bank account to look good when looking for a home? Thoughts?
So your down payment and closing costs is something that are verified. But additional assets are also required when applying for a home loan. And the rule is most lenders will require uh, 6 months worth of the monthly payment as reserves in an account. So aside from your down payment and your closing costs, we will require that you have an uh, additional funds of, like I said, 6 months worth of the payment in an account as reserves.
Awesome. Thank you for that. Uh, Both to Jesse and Lisa, for our self-employed individuals, is there anything that we need to know? The first thought that comes to my mind is organized finances, making sure your financial records and documents are in order. Can either of you speak to the experience of working with somebody maybe that's self-employed?
Yes, on the financing side, it's self-employed borrower is looked at the same way as a W-2 wage earner, in the sense that um, we will require to see the last 2 years of employment history, and by that we would need a copy of the income tax returns for the last 2 years of filed income tax returns, along with year to date profit and loss statement if it's a business that you own, or if you're an independent contractor. Um, those types of conversations is what we would have when we sit down and run the credit and look at your situation individually. Everybody's different, but we do offer financing for self-employed folks. The documentation is really where uh, we would uh, we would differ from a W-2 wage earner. But other than that, I recommend sitting down first, looking at finances, looking at credit, and then we can determine what the best path is.
Thank you, Jesse. I appreciate that. Another an interesting question that was asked, can I buy and sell at the same time? I haven't encountered that. I'm curious as myself as well.
Yes. So you can absolutely buy and sell at the same time. So how it works is it's called a contingency. And what you would do is if you currently own a home and you want to purchase another home, is we would get your home ready, we put your home on the market, we attract a buyer, and then that buyer that makes an offer on your home, we put a contingency in place, which basically tells that buyer, hey, Mr. Buyer, you can't buy my home unless I find a replacement property and I'm able to actually close escrow on that replacement property. So that buyer knows that he has to sit and hang out with us in escrow while we go and search for another home, make an offer on that other home, and then actually close escrow. So how it would work is we would close escrow on the property that you currently own first, use the funds for that to purchase the replacement property. So that is called a contingent sale. And it can be done. And sometimes you'll have maybe 5 of them in a line and they all piggyback on each other. The thing to know is that, people get worried like, oh, am I going to own 2 homes or be homeless? No, because if you are in escrow on your current home and then we find a replacement property and you make an offer on that replacement property and you do your inspection and you just don't like it, you were able to cancel that transaction and then come back to the buyer that's currently in escrow on your current home and say, hey, do you want to hang out with me while I find another home? If they don't, then you're able to cancel that escrow because it's all contingent upon you finding a replacement property and closing on that replacement property. So worst case scenario is if you can't find a replacement property, then you would just stay in your current home.
Wow, so it's the fine print, those contingencies. I brought it up a little bit earlier ago, but we have the experts here speaking on it. So Lisa, thank you so much for explaining that beautifully there. Okay, moving on. We have a few more questions, so thank you again. I know we're a little bit past time, but the conversation is good. We're here for you. We're here to help, and so I appreciate you all. Um, the question is now, does a cosigner help to lower down the interest rate if the credit is average? Uh, I I will tackle part of this, but feel free to jump in here. I feel that adding a cosigner also adds an income, but also adds a lot of responsibility. So what it can do is help you lower your debt to income ratio, assuming that that co-borrower is in a good financial position. If the if the credit is average, it varies again on a lot of those factors: the debt to income, the financial standing of that co-borrower. Assuming that they are good borrowers, or if the credit's average, it will generally help. Am I right, Jesse, in that estimation there, or any thoughts?
Yes, actually, you're dead on because that's exactly it. The cosigner can help with the debt ratio and help you get that home that you couldn't afford by yourself. But at the same time, that cosigner's debt is also going to be considered, and that cosigner's credit score is also going to be considered. So, if the cosigner has in good financial standing and um, uh, that can definitely help. But if he's not or she's not, then um, that can also work against you. So you're right dead on, Alfredo.
Thank you, Jesse. I will also add that adding a co-borrower is a serious responsibility. And I only say this because although I haven't seen it done on mortgages, I have seen co-borrowers on different consumer products like a personal loan, auto loan, and where that co-borrower, maybe it was done in good faith initially, but some reason, somehow that relationship between the borrower and the co-borrower went sideways, or you name it. So just keep that in mind when borrowing with somebody. General advice is to, if you are going to co-sign, co-borrow, that you both, are operating in good faith, and you can sustain it, because it's either it's the other person's responsibility if somebody bows out for that payment, which will ultimately affect your score and all of this other things. So some just general advice and knowledge there.
That's it. That's a really good point, Alfredo, because I've seen in my experience in the past where you go in with somebody to buy a home, and then like you said, the relationship goes one way, and you have to remember when you sign on that contract or you sign that deed, both co-borrowers are equally responsible for that property or that loan, and they're both owners equally of that property. So, those things to consider. When bringing on a co-signer, you have to really know that um, it's a huge responsibility for the signer, for the co-signer, and also for the one who uh, is asking for the co-signer.
Thank you, Jesse. And so now we have a question here about VA loans. Is there any rules needed to know for a veteran to get the VA loan for home buying? I will say what I do know, and I'm happy to let my team chime in here. VAs and VA loans, there's a lot more restrictions, a lot more different criteria. Um, and I think there's a lot more stipulations or protections in place, but that's the extent of my knowledge there. Um, Jesse, at least anything that you can speak to here?
On my end, on the finance side, or financing side, yeah, VA loans are specifically for veterans. They allow a veteran or somebody who served in the armed forces Um, they allow you to get into a home with no down payment, zero down payment. But as far as any rules needed, I would say you sit down with a VA expert, because there's a lot of little details that come with that type of loan. There's a lot of advantages, but there's also a lot of little details that are important.
As far as the real estate agent is concerned with VA loans, if you're looking to purchase a home, a VA loan has certain conditions that a VA appraiser is looking for. So sometimes a VA appraiser is a little bit more strict on condition, as far as like peeling paint or the condition of the roof or the foundation that they are looking at. So the condition of the home comes into play a little bit more in a VA loan. And then also, if you're looking for a townhouse or a condo, those complexes also need to be VA approved. So those, before you go out and look with your real estate agent, same as an FHA type loan, the complexes need to be FHA or VA approved.
Wow, thank you so much, Lisa. Again, wonderful insight, especially for our veterans out there, or active military and service members. Fantastic. Um, I think this goes to the financing side here. Do you have restrictions on loan offers if I file for Chapter 7 2 years ago? So a history of bankruptcy. Jesse, any thoughts?
Yeah. So for someone who filed Chapter 7, you need, most lenders will require some space between that. So uh, it's been 4 years is what's usually needed. 4 years from the time that the Chapter 7 was filed before you can apply for a new mortgage loan.
Fantastic, thank you. The next question is getting fairly specific. It says if I have saved about 30,000, but it's cash, how long before I buy do I have to start circulating it into my account? I have full-time employment and tax returns to show how I obtained the money. The money was not in my account because I was sorting a child support dispute. Jesse, any thoughts?
Yeah, funds need to be seasoned at least 2 months. That's what will be required to show that the funds have been in your account for at least the last 2 months. Um, and it's when it's this amount of money, it's really important. The longer you have it in the bank, the better.
Awesome. Thank you so much, Jesse. So that were all the questions in the chat. I want to thank everybody. There are some questions in the Q&A that I do see here. So let me see if I can uh let me see. Are you familiar with REO loans, Jesse?
REO loans. Well, that's a term that was used a lot in a different market when there was a lot of foreclosure homes, or homes that had been foreclosed on. They were referred to
Hmm.
REOs, or real estate owned. Um, there isn't that many out there right now, homes like that. Um, but yes, we will definitely consider financing for those types of homes.
So for the questions on the RE loans, I thank you. We did see them. Well, I was going to wait till the end. So a lot of the follow-up questions that were asked about the interest rate and how can you get a list, I think would probably be best to have a conversation with Jesse, to see how that applies, because it seems to be a more of a specific situation there. But again, thank you so much. That was the end of all the questions. I want to give just a quick moment for both my colleagues, Lisa and Jesse, just to say last few minute words. So I'll start off with Lisa. Any last few words?
I would definitely say make sure this is a relationship business. So make sure that whatever lender that you're using, hopefully it's the credit union because they're reputable and they have your best interests at heart. And make sure that whatever agent you're using is also putting your needs first to make sure that we're all on the same page when we're trying to help navigate through the situation of home buying.
Thank you, Lisa, so much. Moving on to you, Jesse. Any last words for our folks tonight?
Yeah, I agree definitely with what Lisa just said. This is definitely a relationship business. I've had situations where uh, I've, uh, I mean, have 6 months. You spend 6 months, 7 months, sometimes a year. Working with someone to help them get their finances in order, help them through the process of finding them home. Once they find a home, the escrow process, it takes a lot, and so the person you're working with is very important. You really need to trust them, and you need to know that they do have your best interest in hand. My advice is it doesn't cost you anything to sit down and talk to a mortgage loan professional about your situation. Even if you don't buy today, we can put you on the path to buy and get you prepared, and get you into a home in 6 months or a year or whenever your time is. But that's my advice also. Prepare yourself. Sit down with an expert, see your situation, and then make a plan and go after it. We, with the credit union, we finance in most states here, not just California. There's a couple states that we don't do financing in, but we can also help you with, or you or your family help you with, financing outside of California. I think that was one of the questions too, so just threw that one in there. And thank you for having me.
Lisa, Jesse, thank you so much for sharing your time, your expertise, and valuable insights. I think what shined through was your willingness to help folks. And I think that was evident in your way that you shared your information. So there you have it, folks. Dream it, own it, Home Buying 101. That here concludes our session this evening. I thank you so much for everybody who tuned in, and thank you for your engagement. This webinar is recorded and will be sent in a follow-up email, so you can come back and listen to these nuggets whenever you need to. Of course, Jesse's information and Lisa's information was provided. Come talk to us. We want to be part of your home buying journey. We believe that housing is a right, so if we can help you to that piece, more than happy to do so. Thank you so much. We'll be signing off tonight, and we hope to see you at our next webinar. Thank you again.